Hey there, welcome back to the Gold and Silver Update, brought to you by the top-rated precious metals company, Goldco. Hi there, I'm Ron, and as always, thank you so much for joining us. Listen, markets were rocked at the start of the month on Monday, August 1st, and people seem to be wondering if fears of a recession are finally beginning to impact the financial markets. The Dow Jones Industrial Average lost over 1,000 points, while the S&P 500 and NASDAQ indices also saw major losses. Now, while they did recoup some of those losses by the end of that week, there are likely many people wondering, could this be the harbinger of a possible recession? Could we finally be seeing an end to the exuberance that has pervaded the financial markets? And more importantly, for those who see a possible stock market crash on the horizon, how can you potentially defend yourself? Will traditional safe havens like gold and silver help? Well, let's take a quick look, shall we? You see, most people might expect that when stock markets start to fall, gold and silver will climb. And that's because gold and silver are safe haven assets, and normally when financial markets falter, investors rush into gold and silver to help protect their assets. But both gold and silver sustained losses on Monday, along with the markets. So at first glance, that seems unusual, right? But if you know anything about gold and silver price history, it really shouldn't be that shocking. The closest situation we have to the present day is the 2008 financial crisis and the lead up to it. While gold grew steadily in the early days of the recession, it began to decline through mid-2008 along with the stock markets. By the time the markets seemed like they were on the verge of collapse in September of 2008, gold had fallen nearly 20%, and it continued to fall, falling nearly 30% from its 2008 highs by mid-November 2008. But then, gold began to rebound, decoupling from the markets. And while stock markets continued to fall, reaching their lowest point on March 9, 2009, gold continued to climb higher and higher. And by that date, gold had gained nearly 25% from the time stock markets had peaked in October 2007, while markets had fallen more than 50%. And from there, gold just continued to climb, reaching new highs in 2011 while markets struggled to regain their footing. In addition, silver had a similar performance, although its rise from its 2008 lows to its 2011 highs was even more significant. You see, while gold nearly tripled, silver more than quadrupled. Okay, but why did gold and silver drop during key periods of the crisis? If gold and silver are safe havens, why would they fall in value just when it seems people need them most? Well, let's take a look at the role gold and silver play. You see, aside from being safe havens, gold and silver also serve as hedges. They can be hedges against inflation, against currency risk, and against economic downturns. As hedges, they can potentially provide useful liquidity to people who need it. And liquidity is likely needed most in the middle of a full-blown crisis. Investors who own gold as a hedge may liquidate their gold and silver holdings when stock markets start to slide. And if they're heavily leveraged, well, they may fear margin calls and thus need to drum up quick cash to cover their position. Gold and silver can provide that easy cash, as gold and silver markets operate nearly around the clock, all over the world, and are highly liquid. And that's why you shouldn't be surprised to see gold and silver fall in price in the short term at the same time stock prices are falling. That likely means that gold and silver are functioning as they should, as hedges against risk. Now, over the long term, you would expect gold and silver prices to rise again once gold demand from increased safe haven buying outweighs gold selling by hedgers. So, what will gold and silver do next? Well, nobody knows for sure, but likely in the short term, we may see volatility in gold and silver prices, especially if stock markets become more volatile, with the latest jobs report having demonstrated that the labor market is in fact slowing. We're finally entering a period in which markets have to face the reality of a possible slowing U.S. economy. In addition, persistent inflation and high GDP numbers can't mask the underlying weakness that pervades the economy right now. And many institutional investors are hoping that's what's happening right now and will force the Federal Reserve to start cutting interest rates earlier than expected. Now, while gold and silver are often believed to respond positively to lower interest rates, remember that we could potentially be in the early stages of another recession or financial crisis. Established relationships could go out the window if markets begin to panic. And that's why if you're looking to protect your financial well-being with gold and silver right now, you need to be prepared for gold and silver to possibly go down in price before they go back up. If we face another situation just like 2008, we could very well see gold and silver declining in price as stock markets weaken and fall. And if that happens, we should expect for gold and silver to decouple at some point and start rising again as safe haven demand picks up. But once again, no one knows for sure what will happen. But remember, for most people buying gold and silver, it's not about making short-term gains. It's about holding on to tangible physical assets whose value grows over the long term. Now, it's not about what gold will do within the next 6 months or the next year. It's about what gold will do over the next 5 to 10 years or even longer. So if you bought gold in 2008 expecting it to be more valuable in 10 years, you would have been right. And if you had bought gold in 2011 expecting it to be more valuable in 10 years, well, you would also have been right. And then hopefully people who buy gold today expecting it to be more valuable in 10 years will also be right. But you have to be prepared to see some ups and downs in the interim and be willing to ride those out. The long-term nature of gold ownership makes it particularly appealing to people looking to own gold in an IRA. You see, gold IRAs offer you the ability to own physical gold coins and gold bars while still enjoying the same tax advantages as an IRA account. And if you prefer silver, well, silver IRAs are an option too. And you can fund these gold and silver IRAs with a tax-free rollover from your existing 401k, 403b, TSP, IRA, or similar retirement accounts. Now, if you're worried about where markets are headed next and you want to get ahead of the curve, maybe it's time to start thinking about how gold and silver can play a role in diversifying and protecting your portfolio. So go ahead and call Goldco today to learn more about how gold and silver can help you possibly safeguard your financial future. They work directly with mints around the world to source gold and silver coins directly from the mints that produce them, ensuring that the gold and silver you buy is 100% authentic. And with over 6,000 five-star reviews and over $2.5 billion in precious metals placements, well, Goldco has built up a reputation as one of the best and most trusted gold companies in the country. Goldco is also offering a free gold and silver kit to help inform you about how gold and silver can help you. Simply click on the link below or use the QR code on the screen to get yours today. Well, that's it for today's market update. Please don't forget to show us some love with a thumbs up and go ahead and click on that subscribe button. And let us know what you think in the comments below. Who do you think the next president will be? And what impact do you think that has on the price of gold? Until our next glittering journey, stay curious and keep shining.